Disruptive technology company Big Sofa has begun trading today on the alternative investment market, having raised £6 million in its initial public offering. Its technology is based around the idea of providing video analytics. Simon Lidington, the current chief executive, started the business back in 2009 with Matt Lynch, who is now chief strategy officer. Well, Simon joins me now with some more analysis of what's been happening. Simon, welcome.
Thank you.
Take us back to the beginning. I said 2009 when you got together with your colleague Matt, but explain a bit more about the business.
Well, Big Sofa started life as us taking a sofa around the UK, putting it in public places, shopping centres, high streets, wherever, and engaging the public, consumers, in conversations. We filmed it. And as we built up huge amounts of video, we realised that we needed some technology to manage that and analyse it. Over the last 5 to 6 years, we've developed as a technology company until 2.5 years ago we decided that that's what we were going to be. And now we are in a sector which doesn't have too many competitors, but actually a huge amount of potential.
Well, explain a bit more about this and the business model that you've got here, because obviously it's developed over time off the initial Big Sofa idea. The business model in more detail.
Well, our primary market are corporates who are interested in what their consumers have to say, but also what they do, and are increasingly interested in using video. But we also have a parallel market who are the big market research agencies like the Ipsoses and Kantars and GfKs and so on, who are global companies. The industry, bear in mind, the consumer research industry globally is worth £30 billion. And so there's a huge amount of activity. As video grows, we earn money from taking video of consumers from multiple sources, loading it to our platform and making that available to agencies to work on 100 hours of video of consumers and do that much more efficiently, but equally to all of these big companies who want to plug into those consumers. And we charge them for what they upload and for the time that we spend in tagging or coding or doing any of those activities.
So the contracts you've got with these companies, are they long-tail contracts or are they small bits of business you have to keep on bidding for?
It varies. Bear in mind it's a new sector. So there are some clients that we have where we have 12-month contracts with them. There are some where where we've been taken on, like Unilever have taken us on to integrate video into their knowledge management system globally, and that is a longer-term contract. But for some of the new players and new users of video, then those can be individual projects, individual contracts, until they build up a head of steam and engage with us more fully.
So you come to the market and you've raised, I believe, £6 million. Why IPO at this time?
Well, because the market is poised to take off, and in particular in North America, but I would say globally as well. And we're considered to be one of the market leaders, if not the market leader, and we want to accelerate our growth. Our preferred method was to be public, because that gives us access to markets, it gives us access to investors, it gives us access to more cash if we need it, but primarily we want to move very quickly, and this is the perfect vehicle for us. As
I said at the top, you describe yourself as a disruptive company. You come to a market where you say there's not much competition, but presumably there is an increasing potential for competition here. I mean, how far ahead of the game are you against some others?
Well, I think we are ahead of the game simply because we've been doing this and our know-how matches our technology. And so it's not just about the technology. In the end, some of the basic technology that in any market can be commoditized, but it's what you do with it. And so our understanding of how to use the technology and how clients will use it, I think we probably have a significant lead, and that's really what we want to maintain.
Yeah, okay. Part of this expansion strategy, of course, as you said, involves the States and other areas. What is your expansion plan?
Well, currently we have 6 people in the States. Our plan is to grow that to 10 to 20 people, but I think we reckon that the North American market is going to grow far faster and offers greater potential because so many of the global corporates have their headquarters in the States, and that's really where we're targeting.
One of the big issues about being a British company is the fact that UK PLC at the moment seems to be up for sale. Do you always have one? You look over one shoulder to people wanting to buy the business. Do you have any approaches?
We have had interest, not as a result of the IPO. That's far too soon. But I think we're actually more interested in growing the company organically and possibly thinking about other routes ourselves, rather than folding into a bigger group or into a trading partner. That's not something we're looking at right now. We want we've a long way to go. We've got such a lot of potential. We want to realise that ourselves. Yeah,
and what's the investment case then? How do you pitch this to investors in the business? Clearly, this morning with the uptake of the shares, there's an interest in the stock. I know it rose out of the gate this morning. I think up to about 25% at one point. How are you pitching investors in this opportunity?
Well, the size of the market is significant, and I think it's not necessarily a market that most investors are familiar with. And so when they learn the potential, I think that's of great interest. I think the second is that our technology is regarded by clients, our clients, to be market leading. And so therefore we've proved, if you like, we've proved ourselves to be very strong technically. And I think the number of competitors is relatively small at the moment, and as I said earlier, we have a lead, and so I think there's a natural interest when you're in that position in the market, and particularly when the market has so much potential in it that's unrealised yet.
I know you've already had a profit in the business, but where do you go from here? What's the investment return potential?
Well, I think we will, with the new investment, I think we're going to grow fast. I think we will hit break-even during the early part of 2018. So in terms of the way the business is operating, I think we will show good margins, good profits, but primarily we want to grow our revenue fast to start with, and therefore I think a lot of the return is going to come in the increase in the market capitalisation. That's what we're looking at.
Does Brexit make a difference to you?
It makes some difference in the sense that we now have to think about compliance in 27 different ways as opposed to one. Those technical issues will make a difference, but no, it doesn't really make a difference. We've been selling to the US already, and that's not going to stop. So no.
Yeah, okay. Well, look, Simon, good luck for 2017.
Thank you very much.
And good luck for the team as well. That's Simon Lidington. He's Chief Executive of Big Sofa, the disruptive technology company that came to the market today, the 19th of December.